Yeah, welcome to my weekly fundamental video. So yeah, I'd just like to state before we start that I've been a bit quiet this week, and I do apologise for that on the social media, my posts and everything. Yeah, it's just been a bit of a stressful week and everything, and all this kind of stuff. But we're back on it now, and we're not going anywhere, so we're gonna push on. Yeah, but the video is going to be laid out pretty much as usual. We're going to start off by looking at the difference between the J30 and S&P 500, and then we're going to look at the UK 100, S&P 500, and then we're going to take a look a bit at how I trade as well. So we're going to put that in because I've had a few questions and all this, so we're going to look at that. Yeah, and then we're going to look at last week's news, how this has affected the markets, what kind of trends are going to be carried into this week, and then we're going to look into next week to see what's coming up and everything. So yeah, I mean, this is the German 30 SPX 500. As you can see, this is Friday here, 20th. This is not the Friday just gone, but the Friday previous to that. So it closed on Monday, this Monday. Pretty much the same difference on the J30. They came closer together. You can see here on Tuesday, moved further apart on Wednesday. Now for between Wednesday and Thursday, because American markets were closed on Thursday, we've just used the same point, so they didn't move. Although the futures moved, the actual stock market wasn't trading or nothing, so we kept it. I kept it equal because that's how I calculate the difference. I use the actual stock market, not the futures. So we just kept that the same, really. As you can see, we had a big move apart on Friday. The German 30 moved way above the S&P 500. We're up above the 200 level here. So we're going to look at what caused that and how that happened in a bit. And then take a look at the UK 100, S&P 500. This is Friday once again, and we did the same for Thursday, for Thanksgiving in America, so Wednesday to Thursday. As you can see on the Friday when we opened, on the Friday we closed here just above the minus 120. This is minus because the UK 100 is lower than the S&P 500, whereas this is positive, so this is the German 30 again. This is positive because the German 30 is above the S&P 500. So back on the UK 100, yeah, we moved further apart through till Tuesday. Big jump together on Wednesday, and another big jump on Friday. So we're going to look at what caused that in 2 bits time. We're just going to take a look at how I trade really now. So yes, just jump to that. So to demonstrate how I trade, we're going to use the S&P 500. This is the SPX 500, and P just stands for price, and we're going to use it versus the FTSE 100. P once again just standing for price. Yeah, and these are just the closed prices for the S&P 500 here, and once again closed prices for the FTSE 100 here. Yeah, and this is a 75 mean. That's what we use. Yeah, so I like the 75 mean. I think it's very good. Yeah, and these are just the mean prices. You can see just average. This is standard deviations. You can see here, standard deviations. Basically, what we do is take these 3 bits of information and we calculate an adjusted figure to get an adjusted price. We create an adjusted price so that we can compare the 2 assets, because obviously it's quite difficult to compare 6,375 to 2,090. Like, there's always massive difference. Like, we want something neutral where they can go back together. Yeah, so they can go back together. And yeah, and that's just done by a fairly simple but mathematically wise but slightly complicated adjusted figure. We create this adjusted figure, which is just basically we take the difference between these 2 standard deviations, calculate the midpoint, yeah, and then we divide the midpoint by this and we get the adjusted figure, and we adjust the mean and we adjust the price. We do that once again for the FTSE, we get that, and then we work out the difference. We take the adjusted price away from the adjusted mean, the adjusted price away from the adjusted mean, get these 2 figures, and we take the FTSE away from the S&P 500. As you can see here, we take B2 from there. And that gives us the difference. That is pretty much this chart here. Let me just bring that chart back up. Yeah, that's how we get this chart. So what we were looking at Friday 56. So that's how we get this point. Oh, sorry, that's how we get this point here. Yeah. Now I've just magically brought up this spreadsheet. This is where it all happens as such. As you can see, it's labelled trade, so it tells us if we should trade it or not. As you can see, this is minus 51. So this is just simply the difference that we've got from this spreadsheet here. So it's minus 51.2841. So we just tell Excel to go and get that. It's minus 51.2841, and we've got a few other digits, just the decimals, same number. And then we just take it positively to work out the difference. And this works out the probability of the trade working, really, of them coming back together, because we play them one way apart. If you view my earlier videos, you'll see that I discuss how I wait until they get so far apart and play them back together. And now this tells me at this point there's an 88.3727% chance. So 88.4, let's just say. Yeah, and this is kind of calculated just with this. This is what you call a normal distribution. Slightly skewed to the negative side with FTSE. It tells us like how often is price action in these points or between these 2 points. So this tells us that between negative 203 and negative 393, there are 200 times that price action is between those 2 points. So yeah, that's pretty much. And then we work that out into a percent, and we add up the percentages and we get that figure there. And this works out our overall risk, because obviously, as you can see here, never really goes further out than minus 583 or 556. So this just works out from where the difference is at the moment. So the difference is minus 51. How much percent does price need to change for it to go to, say, minus 583? And that gives us this, our overall risk, which is minus 13.22% if we were to take this trade, which is quite a lot of trade. Quite a lot of risk. Too much risk for me. I wait for it to be further, but quite high probability. It's a risky trade due to this high risk. So yeah, that's a bit how I trade. And I have a trade like this at the moment. If I bring up, this is SPX 500 and American Express. So this is a trade I currently have on at the moment. If I just wrote it down, see that. Yeah, and at the moment we're at minus 88.50. The probability is above. It's 100% probability. Now the thing with this is it's because the AXP American Express is very far away from the S&P 500, so this minus 88, as you can see, it doesn't really go much further than minus 59. This is because we're dealing with like big extremes. After Costco and American Express wrapped up their deal, so to speak, they ended their deal where American Express would be the only kind of credit card payment methods that you can use in the stores. It really sent it tumbling down. But we're at extremes, and this has brought us a bit of pain because we're still waiting for these to come back together. And the thing is, when you're dealing with extremes, the more likely you are to hit new extremes. So we're just patiently waiting on that one. We're gonna hold it. Wait. Statistically, mathematically, it's a good trade. We have the CFO of American Express talking at JP Morgan's like little conference thing on Wednesday, and then we got the CEO talking at Goldman's the week after. I forgot the exact date, but yeah, that's kind of fundamentals coming up. So this has been an interesting one, so we're going to hold that anyway. But obviously, this video and everything's more interesting to index, and there is another index trade that is looking quite fruitful that I'm interested in taking into this week. But I need to do due diligence, but we'll cover that in the video. What my reasoning behind the thing, and if anyone's interested in hearing more about that trade, once I've finally finished, I would be doing diligence on it this evening, which is why the video is a bit earlier than usual. But yeah, so as you can see, despite the quiet week for myself, yeah, we'll continue on. So yeah, it's good. Yes, do the news. So we're going to start off with Europe and Germany as well. Germany and Europe all in one. So this is the J30. And we're talking about Monday, so we're talking about this bar here, the 23rd. So yeah, German manufacturing was released on Monday. This was the PMIs for manufacturing in Germany. And what did it show? It showed a figure of 52.6, which is a figure of expansion. Anything above 50 is expansion. And that was compared to an expected 52, and up from 52.1 previous. So yeah, good. A bit of growth, stronger. But we saw it fall. Look at that, we saw it fall. Why did we see it fall? Well, is the answer in the European PMI that was also released. So we also had the composite PMI, which came out at 54.4 compared to an expected 53.9. Both the services and manufacturing components, so they do a manufacturing PMI and services PMI, and the 54.4 PMI composite is those two put together. And yeah, and it came out better expected, so 54.4 is obviously higher than 53.9. So that's a good day. Why did it go lower? Two main reasons. First of all, the PMI figures are created, done by a company called Markit, spelled M-A-R-K-I-T. And what they found was there was considerable spare capacity, as well as firms lowering prices. So there was spare capacity in the economy, which is not great. It means the economy could be doing better. It could be producing a lot more, but it's just not. There's more that can be done. And also, firms are lowering prices, which means they're struggling to get consumers in probably. So they're lowering prices to get people in, which is a drag on inflation. So as you can see, for those two negative reasons, although the PMIs look good, those two background negative reasons could have driven this lower on Monday. Could have driven. So also that because the PMIs were good, it relates to the ECB's quantitative easing. Yeah, just the quantitative easing it's going to be, people expecting it to be a lot. And the good news plus the bad news, the good news could have pushed back those expectations, maybe pushing the J30 down, yeah, making people think they don't need to do so much. But obviously the inflation's bad, so you know. So yeah, quite an interesting one. We got bad and good leading to a bad day. Bad news, good news leading to a lower day. Bad, well, I'm synonymizing bad with lower. It's not necessarily be bad all the time. And the ECB is an interesting one. I'll talk about this more when we go into look at next week and probably throughout this week. But the ECB has committed itself pretty much to do a lot of action. Like, look at this rally. I mean, we started back here, I think it was, or was it here? I'm looking at the dates now. Yeah, it was here. This was when they said they'll do action here, and it just boom. Look at that. This is pretty much all on ECB. I mean, the German economy is quite good, but well, it's fairly good. But that's almost. Look at the sell-off. This was because of world fears, because of China. Sell-offs were usually a lot harsher as well. it's strong, solid. So a lot of expectations from the ECB. But yeah. Yeah, we're going to flick over to America now, so I'm just going to get that chart up. As you can see, this is the week of America. Probably important to stay up first. A lovely, another sideways week. Not much really happening, but stuff did happen. And the first thing we cover is Monday. So that's Monday here. Yeah, and we're day on existing home sales, which showed a retracement of minus 3.4%. This is compared to an expected minus 2%. So there's 3.4% less houses sold. Not great. Slowing economy, arguably because people think interest rates are going to rise. So then they don't want to buy a house no more. They think it's more expensive than it was maybe a few months ago. You know, with all these people, if you look at the Fed probability, it's really high at the moment. I think it's around high 70s, low 80s. So I checked it today, but off the top of my head, it's really high. People think they're going to raise. The Fed usually raise around the 70% target for the Fed futures. So yeah, watch that. And that's Monday. And as you can see, because yeah, that's Monday, Thursday. Yeah, this is Monday. As you can see, we had a slightly negative day on the S&P 500. If we bring up the JER, we had a slightly negative day because of the bad data for both of them. We had a slightly negative day. And just to bring in the UK 100 now, there wasn't much news out on the UK 100. But as you can see, over the weekend, it just fell, didn't it? Got that. Arguably because of this indecision, maybe it's more of a technical move than a fundamental move. But yeah, that's what contributed to the real lacking change difference between the two assets. So if I bring up that chart, so yeah, this is the JER 30 SPX 500. So as you can see, close on Monday, not much change to close on Friday, because both of them fell off. SPX UK 100 due to the early fall Monday morning when we opened up, we're slightly apart, but overall not much change, not much big change. So let's go on to Tuesday. So German 30 again, back on the JER 30 for Tuesday, and we're talking about the IFO business climate. This is a measure of expectations, current conditions for the next 6 months. So current conditions, what they think now, how they're feeling, what they're looking at, and how they're going to think they feel and look at in 6 months' time. And this was better than expected. Figure of 109, and expectations had been for a figure of 108, so a beat by 1. And yeah, the 109 figure is above its median, so MEDIAN, figure of 100, which is calculated from 1991 to 2015, and it was both current and expected conditions beat estimates. So people like Germany, but well, people could like Germany, but businesses looking for a good future, looking into the future happily. But we sold off. Let's delve deeper in that. Let's dissect that. Let's look at the sell-off. I'm going to have to find the day. As you can see, we are... Tuesday was the 24th, I believe. Yeah, it was the 24th. Yeah. And this was the release, 9 o'clock. Here. So tourist times a bit funny sometimes. As you can see, we did rally on the news. We had this big sell-off here, bang, and we came back up, came back down. Arguably, because we were already in a bit of downtrend. As you can see, we broke this. Once this had broken, we'd set. It was a short-term trend, but we'd set the trend lower. So obviously, the positive news did push it higher. Did help the bulls fight back. But then, you know, it gave the bears a bit of an extra help, bit of an ace in their hand, because they can argue Whereas makes the ECB action less so. Like they're not going to do so much. So could have then had some more shorting. And as you can see, we had this boom, down, up, and then down. So down just naturally in a trend. IFO business climate pushing up, good data. Expectations for monetary policy down. We get this kind of nice movement, quick, fast-paced action. Yeah, and that was the DAX on Tuesday. And although I said this is a technical move, and that is an assumption I'll critique in 2 stories time. There was a world effect that arguably helped push this down, but we'll get onto that. I haven't forgotten that. We're just going to go to America first and talking about the American GDP. So we're back on the S&P 500, and we are on Tuesday. Friday, Thursday, Wednesday, Tuesday, and Tuesday's here. Yeah, and GDP for America was revised higher to 2.1% from 1.5% at the second reading. And this is still down on the second quarter growth at 3.9%. So despite it getting revised higher from 1.5% to 2.1%, it's still lower than 3.9% we saw in the second quarter. But just note, 2.1% is above the long-term average for the American economy, which is 2%. Yeah, I mean, it's a bit of a bland reading, really. I mean, it's 2%. It's not much like its average, you know. But what was really interesting was the price action. So let's just dissect this. Now I ain't gonna have to work out the day because look at that. So it just stands out like nobody's business. So this was before the event. The announcement was at 1:30 UTC, so that's 1:30 in the afternoon. And this is morning, bang, so up, down, and then look, this time the announcement. No, it was average. So the bulls took it, the bears took it, average, up but then back up. This is a doji size buying, then straight back down again. Look at that. Up. And the best bit about it, this star at the time of the GDP replicated on the daily. Yeah, bang. Go back on the hour. That's really interesting price. I thought anyway. As you can see, look. If we just let's draw a line on this. Just draw a line. It's always exciting drawing lines. Look at this. Just draw a kind of quick trend line like that. You know, this is where people like it. And then we went into extreme, and it was like a real bow down here, bam, 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 bam. And we went back up here, and we were all happy days again. Sunshine and rainbows. Down here, big bow. So that was quite interesting price action, although it was a bit of a dull release. Yeah, and with that said, it's time to go on to the geopolitical, arguably the cause of this fall here, and the fall on the GER30 that we saw. Where's the GER30? This GER30, this fall here. What caused that fall? And it was arguably the downing of the Russian jet by Turkey. And you know, geopolitical tensions worsened due to the event. Vladimir Putin responded in the typical understated way that has become synonymous with his presidency, and he stated that the downing of the jet was a stab in the back administrated by the accomplices of terrorists. A lovely bit of don't know what to describe it as, maybe a bit of kind of selective memory, Alzheimer's, because you know he's terrorist backers, that's his club really, you know, Ukraine and all that. So yeah, don't know what to say about that comment. Don't really know what to say about Putin. That I can say and post really, but yeah. So the situation in Syria is not stabilising, to put it in short, and the response has been from UK that they're voting again on whether to bomb Syria. but this time for a different reason. The first time they voted, they wanted to bomb Vladimir Putin. They wanted to bomb President Bashar al-Assad. This time they want to bomb ISIS. Not really too much clear, except we kind of want to bomb Syria. So it's the only thing really clear. And the effects on businesses, consumer, people are looking at it to dampen both investment by businesses and dampen UK and EU and American, just generally the world's consumer consumption, mainly because you don't really feel like going out shopping when you're a bit fearful that there could be a bomb, or you're a bit fearful that the world's coming to an end. Well, it's not coming to an end, that's a bit of an exaggeration, but it's going down the drain. I mean, there's still the ongoing refugee crisis, and I've got my notes, just one word which is stuck. Everything's stuck around that, refugees are stuck in one place, politicians are stuck in one place, everyone's just stuck in one place. So let's see how that affected the difference anyway. We'll go look at that. And yeah, so start with the 30 and S&P 500, bang, got closer. Bigger fall in the JR30 as we saw in the S&P 500. It came back, but the JR just kept going down. So we got them close on Wednesday. SPX 500, UK 100. Different this time. The S&P 500 moved more than the UK 100. I didn't try and show you a chart. Let's just take a quick look at UK 100. There wasn't much news on UK. So yeah, this is Tuesday. As you can see, it was a bit like the Germany. If we break this down. Do you know what it was that on Tuesday the UK 100 was a mix of Germany and S&P 500. We had some crazy price action again. Look at this. But it came back. So like the S&P 500, but sold off in the morning. So it's more like the S&P 500 really than the German 30, because the German 30 just kept going lower. But overall, what was the effect of that? Yeah, the effect was SPX 500, UK 100. The effect was that they went away. Minus 140. UK got further away from the S&P 500, got lower, down to minus 140. Bang. So let's go to Wednesday. Let's go Wednesday. Yeah, on Wednesday, we finally had some news from the UK 100 daily. Bullish news as well, positive. And this was the autumn statement. And I write notes to these videos and everything, and I simply got on my notes. They're usually fairly extensive, but on this one it just says U-turn central. I mean, the Conservatives going into the election in 2015, the one where they got voted in, pledged to be tough on the economy. By tough I mean trying to balance the books, trying to do this, trying to do that, cut everything, cut spending. Well, they're gonna sort it out really. This was their pledge by cutting, and well, they're not cutting. Put it simply, this was their autumn statement. They're not going to cut anything. Tax credits, they're not cutting. This is after their defeat in the House of Lords. They're just benching that one, not going to use it. They got more money for the defence. I don't know where they've got that money from, by the way. So they're investing in special forces units such as the SAS, giving more money to MI5, and probably to the Met's counter-terrorism and Manchester's and so on units. The Met is the police officers in England, in London rather. Sorry. Yes, they got all this money from somewhere, probably from the back of the sofa where the president of China sat when he came to visit. They probably found a few coppers falling out of his pocket. But arguably, maybe all this kind of spending by the government, planned spending, finding money from nowhere that no one knew happened. People betting on the raising of money supply in the UK. So we got a nice bullish day, quite a nice day. Not as nice as Thursday, but a nice day. I like bars like this and like this. This is, yeah, so that's a bit sidetracked. Yeah, now it's over to America as well, so we chat about America. And America on Thursday couldn't let themselves get beaten by the BOE's data dump good day. Sorry, on Wednesday, because Thursday was thanks God given. So, you know, Americans being the Americans, they had to do it bigger and better and more confusingly. Yeah, there was loads of stuff coming out. I'm gonna get. I couldn't note it all down. I'll get up the calendar I use. So yeah, this is the economic calendar I use. This is Trading Economics calendar. tradingeconomics.com/calendar. I don't know if I'm breaking copyright by showing you this, but probably to get around it, I have to say it's a very, very good calendar. Definitely use it. Go on their website. So I don't get done either for showing you, but just to show you how much they really want to beat England with their data dump. We got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. These all came out at the same time as well. They just dropped all of them at once. Yeah, more just kept coming. Yeah, they really went for it on the old Wednesday. But important one to note, durable goods orders 3%. That's a beat. Unexpected was minus 1.5%. That's a big up from the minus 0.8% seen last month. Everything was better than expected for this as well. Defense did, excluding defense did really well. 3.2%. Last time was minus 1.6. Yeah, you also initial jobless claims lower. Less people claiming. That's interesting because we've got NFPs next week, so wanted to note there. Income's getting better as expected, but 0.4%. That's good for inflation. Means more money, more spending. I was about to reference someone there. Yeah, man. As you can see, we've got new home sales. That was slightly weaker, coming off the back of the start of the week as well, the Monday. Yeah, and slightly weaker. So a lot of data. We have to give it to them. They did win. They did win with them. Data barrage. Wow. So yeah, you'll see how that affected the difference. So I'm going to show the S&P 500. So overall, yeah, it was taken as bullish for the S&P, all that data at once. Maybe people just bought it because it was the simplest way to get around not having to note and all that. But I'm checking now they wouldn't have done that. It was generally just taken as bullish. Arguably, big one, durable goods orders positive. Drove that higher. Yeah, we looked at how the UK 100 went higher, so we're just going to look at the JET 30, show you how that moved on the Wednesday. So that's the hourly. We're going to want to go on the daily. That was a big push up. Lovely stuff. That's a bullish engulfing. Probably a technical move. Looking at that, bouncing off that, making you higher now. It's all good. Happy days. Yeah, how did that affect the difference? Yeah, as you can see, Wednesday caused the big jump in JET. Even though the S&P 500 rallied, the big jump in JET was more so, leading them to get further apart. S&P 500 UK 100, similar story. But the inverse, the S&P 500. No, sorry, it's the same story. The UK 100 moved more than the S&P 500. So on Wednesday they caught up. As you can see that. And obviously, as I said before, we moved sideways because of the S&P 500 was closed. Both of them. Thanksgiving. Never think they're all Thanksgiving, giving thanks and all this. But I'm going to use this as an opportunity because yeah, there were some new assets introduced this week on eToro. One of them being the Japanese 225, if they named it, or Nikkei 225 is more commonly known. And there was some data from Japan on that day, so let's go take a look at that. So yeah, this Japanese 225 newly introduced. Yeah, and what did we have? We had both inflation and unemployment data. So we're going to flick this down on the hourly to start with. And this is the time of the release here. As you can see, big moves. This because inflation came out at 0.3% compared to an expected 0%, and unemployment fell to 3.1% compared to an expected 3.4%. Yeah, and basically the BOJ has been toing and froing quite like this, to and fro, over whether to do more QE, more monetary policy stimulus. And although the inflation figure at 0.3% is better than it was expected at 0%, and it's not great. It could still doing some, you know what I mean. But the unemployment rate would seriously suggest that inflation's coming back. I mean, I know there's been debate about Phillips curves and everything, especially with the savings rate of Japan. Japanese people quite like to save. Yeah, well, I say they really like to save. But you know, 3.1%, you thought people would start spending, or there'll be some wage demands in there, and everything, prices should start going up. As you can see, it's falling. It fell because people thought it was less likely. Whether it is less likely or is not is another matter. As you can see, it couldn't hold it. It was only an hour. We'll see how it continues into this week. I mean, it could start going down. We could see start, but it's done this a few times. As you can see, this is real ranging play, which is always a bit of a risky one, but we could get it just breaking low, take it down there, down somewhere here. So it's interesting stuff. Yeah, and as you can see, we're going sideways, so we're just going to flick over to Friday, straight through to Friday. I'm going to look at the FTSE 100 or the UK 100 because we had UK GDP, as you can see, UK 100 daily. Yeah, Friday. We had the VN bar. It closed within, like below where it closed. It opened below where it closed, and it closed, and it never really moved down this bar. Look at that. So it couldn't. That tells you that. It could be wrapping up for a big move. You know, prices getting pressurized into a small thing. Which way will it move? I don't know yet. Well, maybe I don't know. Anyway, yeah. So George Osborne's commitment to rebalance the books was given a helping hand to balance the books, and he was giving a helping hand to balance the books and keep the UK economy growing. The helping hand came from the UK consumer, who were the main contributors to 0.5% third quarter growth. This was in line with expectations. Yeah, so we had 0.5% growth in the third quarter in the UK. It's not great. It would have been absolutely terrible if the UK consumer hadn't been spending so much, hadn't been going shopping. Yeah, I mean, not great. Tight price action, arguably, because it's not great. I don't know really what to say about that. I'm not really a fan of Conservatives, so. Or any of them really. But anyway, yeah, so we're going to look at next week. Yeah, so this is a bit of a skeleton outline of what we've got to look forward to. Wake up Monday morning. UK mortgage lending. Yeah, that's released at 9:30. German inflation rate, important, big start to the week. 1 o'clock Monday, be there, be square. German unemployment, Tuesday, 8:55. Big one again. Big two things, quite quick, quite simultaneous. Looking forward to that. And then the big EU unemployment. Yeah, now this is what I want to say, because obviously when President Draghi spoke about doing more stimulus, he never really said what he would do. He just said pretty much he would do what it takes. Now what does that tell you? You got to ask the question, what does that tell you? And it tells you nothing except he's going to do what it takes, which is a complete value-based judgment, because I could think doing what it takes to solve the European economy is just a simple, buy 5 billion more assets a year, month, quantitative evidence. But another investor might tell you, it involves cutting the the central bank interest rate by a further 0.5%, another 45 billion a month quantity evenings. And basically that's kind of what we're seeing from the effects, is that the market's just pricing in like almost complete kamikaze by the ECB. So that makes it interesting for this conference here, the ECB interest rate decision press conference. Because if these come out bad, then people are going to expect him to do loads, President Draghi and the ECB combined, to do loads. So your risk then comes out, what happens if they don't really do that much? Everything's going to spike off in a different direction. Let's take a euro dollar. It's just bring up a euro dollar. So yeah, this euro dollar. Look, this is when they start talking about doing more. Look, bang! Look how low it is. Like, this is daily chart. This when end of quantitative evenings from America. Arguably that was bigger, but it's the start of that is not so different to start of this. And this had a lot of follow through. This was them cutting down their quantitative easing, getting better, and provocating about doing more or not doing more. And this is sharper. This is actually a sharper sell-off than this. Maybe not here, but yeah. I mean, all the way down here. If you don't do as much as people want, it's just going to spike up. And we've got to remember, we've got stop losses all the way along here. People were just sold here, pretty few people sold down there, sold here. So you're going to have a stop loss there, 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 stop loss. And what you can see is if we don't do much, it's just going to turn around and bang, 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 bang. See what I mean? It's going to come back up in a big manner. And that's, I'm looking to take this counter trend. Although I'm not going to just buy this as such. It's going to be a bit of a double whammy to speak. But yeah, watch the account for that one. That's going to be coming back. That's going to be my. We're going to go on the offensive. Well, we're not going on the offensive. We're going. Yeah, just watch the account. Yeah, so that kind of sums up those two. Manufacturing PMIs. That's from the States, UK, US. 3 o'clock on Tuesday. ADP employment change, once again, US. 1:15 Wednesday. I got Yellen speaking. It's always interesting to hear her speak. Great orator and all that. Yeah, 5:25 Wednesday. ECB interest rate decision Thursday, 12:45. Big. These two. This is probably the biggest event of the week. I think we've got NFPs, but I think this is bigger. I think this overshadows this for once. ISM non-manufacturing Thursday, balance of trade. Once again, yeah, look here. US still not done with beating the data dump. These are coming out at the same time. We're getting both the balance of trade years. I don't think that usually happens. Maybe I just never noticed it. But I don't think that usually happens. They don't usually come out. I thought they were always separate. I don't know, but maybe they're getting a bit competitive. So yeah, 1:30 went Friday. So yeah, that's what we got to do. So yeah, that wraps it wraps it up. Yeah, I hope you enjoyed the video and everything. Good luck trading. And yeah, the posts and my indicator will be back to usual next week and for the next forever. So yeah, look forward to that. Yeah, thank you guys. See you later.